You're listening to the Sound Money podcast of my show, covering the spread on 91.5 WNYE New York. For more news and headlines, as well as our latest interviews, you can visit our website at coveringdelta.com. Joining us now is Max Keiser. Max Keiser is a TV presenter, radio host, entrepreneur, broadcaster, documentary filmmaker, and journalist. He is the inventor of the virtual specialist technology, as well as founder of the Hollywood Stock Exchange, Karmabanque, and PirateMyFilm.com. Max, you have a very large resume, and I inevitably left a number of things out, including your current shows on Russia Today, Press TV, as well as your long-running radio program, The Truth About Markets, that I've been an enthusiastic listener of for many years. But this is sort of what makes you such an interesting and exciting guest to interview, because you've done so much and you come from such a diverse background. So why don't you give us a brief summary of who you are, where you came from, and how you got into what you call financial activism?
Well, I started in 1982 working as a stockbroker on Wall Street, and I did that for up through 1990. And what I learned on Wall Street and what impressed me on Wall Street was the architecture of the specialist system, the way that the New York Stock Exchange works, the whole price discovery mechanism. And I studied it quite closely, and then in 1990, I took a break. I went to Europe for a number of years. I came back in Los Angeles. I created that virtual specialist technology, which is based on the architecture of the New York Stock Exchange and the price discovery mechanism. And what to me, the financial activism is just about reintroducing some balance into the market. So whether it's trying to restore some balance into the market where companies like oil companies are doing business, but they don't pay for the cost of the what they're extracting. They have these externalities that they don't recognize. Same thing about the banks. The banks are able to do business without recognizing their externalities, which is the risk that they're dumping into the public domain. Similar, you can make the comparison that the risks that Citibank or Goldman or J.P. Morgan dump into the public domain is equivalent to the Exxon Valdez or the BP oil spill in the Gulf. These are just externalities that they just dump into the public domain, and they don't pay for it, they don't cost it, it's not on their balance sheet. So the markets are grossly, they suffer from disequilibrium. And so my interest is always to how do you bring back some equilibrium? How do you bring back some real price discovery? How do you make these markets work better? And so I call this financial activism because the way to restore some balance is to go to the masses of people out there right now, in particular, who are protesting around the world against banking injustice. How do you get them to realize some economies of scale and to organize themselves so that they can put pressure into the system and restore some balance so that their interests are represented in the market, in the price discovery mechanism? And the result is a healthier market. It's a healthier social justice and financial justice environment. So that's my interest. That's how I came to it.
So going with that, the whole thing about organizing people in the economy, I've noticed that you have a particular style of communication where you draw battle lines between one group in the economy and another. And you did this in your documentary Savers versus Speculators, and you do time and again when you characterize particular financiers as suicide bankers that are, quote, engaged in financial terrorism and are backed by a kind of market fundamentalism or fundamentalist ideology, as you call it. And you obviously have been pretty successful in leading the SLA, quote, Silver Liberation Army, partly to decapitalize the banking system, specifically at J.P. Morgan. But what is it exactly about these themes of conflict, oppression, and revolution that you feel is so integral to describing the circumstances that exist in markets and the economy today?
Well, as you say, I try to come up with the single most disjointed area in terms of making a good market. And the description of the battle that's being fought around the world, as yes, I've described it as savers versus speculators. And to me, this is the true nature of the battle. because you separate the people who are looking for higher interest rates for their savings and for their wages versus the people who want low interest rates for their speculation and their bets, that they make with derivatives. And so to cleave all the battles that are going on around the world in this way, it should be clear to the people who are trying to push back against the austerity, as they call it, in terms of monetary terms, what they want, what they're asking for is higher interest rates. That's what they want, because it would diminish the speculators, which are destroying their economies, and it would give them more savings and higher wages, which would give them more financial power and more representation politically.
So if we're talking about interest rates, are you a believer that the market can better set the interest rate?
Well, as I've said many times, and others as well, the price discovery mechanism for interest rates should be market-driven, and having a central planning committee doing that is really the fundamental problem with these markets around the world, and this is the fundamental problem, and the market should find a interest rate based on market dynamics of supply and demand.
Now, isn't that part? I'm sorry, but isn't that part of the problem that you talk about when you say that you can't have capitalism without capital? But that's effectively where we are today, right? Because we're in a system where you've got an infinitesimally small amount of capital. It's like a pea under a pile of mattresses, and those mattresses are the debt in the system. And without these central banks that are now literally, and we have that situation in Greece now where the banks would be insolvent without the ECB pumping money straight in there and keeping them afloat. And illiquidity is akin to insolvency in this system.
Yeah, well, it's debt. They're pumping more debt. So it's not capital in the sense that it's equity.
Right.
It's just debt. And so they're pumping more debt at these low interest rates, which has the double effect of impoverishing the community while giving speculators access to low interest or zero interest loans. And then, of course, when they make bad bets, then the governments accommodate them, and they have a higher place in the pecking order than anyone else. So you have this incredible wealth disparity that's been growing. I think it's higher now than even during the period of the robber barons. So you've got the top 0.5% is running away with just wealth aggregation to the moon, and the bottom, the quintiles and quartiles, are becoming ever more impoverished. And that's all done along the yield curve, basically. And who has access to credit at what price, and who has the ability to force credit. Dominic Strauss-Kahn is a perfect poster child for this modern system, because he's forcing himself onto a disadvantaged person with not, an ejaculation, but with bad debt. You could say the IMF or the World Bank or the banking system ejaculates bad debt into the womb of the, global community, who then is pregnant with a faulty system that they then have to deal with. And this is exactly the perfect metaphor for what they've been doing for decades, and it's completely unbalanced. It's not capitalism. I'm a big a fan of free market capitalism. That's architected correctly. That's regulated. Of course, you don't have anybody regulating this current system. That's another problem.
Well, you have the banks regulating themselves, basically, right?
What?
You have the banks basically regulating themselves. They're creating a situation. Exactly.
That doesn't work. Obviously, you can't have the banks regulating themselves. It's never worked. It's not going to work. It's not even. Adam Smith said it wouldn't work. He said you needed tight regulations in a free market capitalist system. You needed tight regulations, or you won't. It'll degrade into a free for all, and complete anarchy and chaos is what you have.
And the thing is, it seems like that message is not really getting through, because I remember a year ago when Bernanke, maybe it was like a year and a half ago, when he was in Congress, and he openly said there, it was part of his opening statement, that his goal, or the Fed's goal, was to eventually move to a zero reserve requirement system. So they don't want capital. It's a nuisance for them.
I mean, when he wrote that, I remember when he said that, I just was floored. This is, and actually, if you think about it, they're moving to a negative reserve system. not even a zero reserve system, because if they bring in these virtual currencies like on Farmville and these other gaming platforms that are being now taken public through a company like Zynga, then you have negative reserve system where the only possibility you have is to you escape all equity completely, because it's all represented virtually in digital format. So no resources, for example, would have any equitable value whatsoever. Your only experience would be what I call a casino gulag. You're immersed in a virtual environment where you're trying desperately to get out of your virtual debt. That is a part of the negative reserve requirement system. And it's what I call the casino gulag. And that's, I think, still a possibility. They're taking this corrupt mentality of forced debt ejaculation into the virtual world, and people are signing up to it by the millions and millions. So once again, the problem is people are signing up, signing their own death warrant.
Wasn't that, you guys covered that story of that, was it a Chinese or a South Korean who was playing Farmville or growing some virtual crop somewhere and forgot to feeding his virtual baby? I don't know what it was, but
yeah, they were raising virtual children online, virtual baby, and their analog baby back at the apartment starved to death.
Yeah, I mean, it's crazy.
So and from the Hollywood Stock Exchange, people, I could tell right away, because we were dealing in Hollywood dollars. And people became addicted to Hollywood dollars and trading virtual securities on HSX, and it totally transformed them into becoming, grueling addicts for virtual money. And there's absolutely no end to it when you've got an immersive quality to this, like Facebook and these other social networking platforms are immersive. So you kind of lower yourself into this casino gulag. And since they control through PayPal and Visa and MasterCard and all the electronic forms of money, they control all the flow of the electronic money. It's a prison system. You can't get out of it. The only way you can get out of it, or try to get out of it, is to click on ads.
That's true.
And so you're clicking all day long to make enough virtual money to buy a can of beans.